Hey traders, my name is Jake and I hope you're having a fantastic day. Welcome to another video. In this one, I wanted to show you a setup that I'm looking for at the very beginning of every week, a setup based on a weekend gap. I'm going to show you this three-pillar setup based on the size of the gap, the fundamentals behind the gap, and then the price action after the gap is created. And after that, we're going to take a look into charts. Not only I'm going to show you the setup that I took this week, which was a Euro US dollar trade, closed 60 pips, live in a Discord, and you can do the same. But I think that most of the traders are avoiding weekend gaps because they don't know much about them. So that was the main reason why I decided to create this video, to teach you everything I know about weekend gaps. So I'm just gonna make a quick coffee and then we can dive in, right?
Son, you know, once you start, there's no going back.
So I think that most of you have traded at some point the weekend gap, but did you really give it a proper thought? Because most of the traders, they see a weekend gap and they are thinking about the chances of that gap being filled. So we see a candle at the top, then candle on the bottom, we see a huge 50 pip gap and traders go, okay, I think it's going to get filled. I can grab those 50 pips. But before that happens, the market goes downside and takes the stop loss and then reverses and fill out the gap. So the traders actually don't give it a proper analysis or proper thought. Those gaps are based on fundamentals, and if you just use technical analysis to expect the outcome of the gap or the future development in the market, whereas the gap, you are missing on a lot. You need to increase the probabilities, the chances of that setup being successful. By the way, I know how much men like data, and I know that most of you guys are men who are going to be watching this video. So I did some really nice researches and the statistics and the studies, and I found out the way how we can increase the chances of the setup that I'm going to show you to be a profitable setup at the end of the day. And moreover, this week I have posted live on Discord one of the trades that is based on weekend gaps. It was on Euro US dollar and it ended up in a profit 60 pips. And I posted that trade at like 9 a.m. so a lot of traders could open. I hope some of the traders made decent profits on it. So that's also what I'm going to show you today. Not only the theory behind the setup, but also we're going to take a look into the chart and I'm going to show you how the setup looks in the chart. All right. So when it comes to weekend gaps, it's in that word, it's weekend gaps. So it happens during the weekend.
Yeah, no shit, Sherlock.
And it's a difference between the price where market closed on Friday and where the market opens on Sunday or Monday, depends on where you live. But it usually happens when there are some huge happenings, impactful happenings during the weekend. For example, this weekend it was US and Israel striked Iran, and then Iran disrupted the oil market. And it happened on Euro US dollar. Of course, it happened on oil as well. And that's because Europe is having an energy crisis. First, it was Russia, Ukraine disrupted the energy market in Europe, and now this. So a lot of investors saw that as an opportunity for worsening European outlook for economic growth. And that was the reason why Euro opened like 50, 60 pips below with US dollar. And I traded it. And why did I trade it towards the upside? Well, again, you need to take into account the fundamentals. Of course, that the oil disruption is going to be painful for Europe, but they are dealing with energy crisis or energy disruption for quite some time now, since the Russia-Ukraine. So these news are not as big in a sense of should it change or could it change the market sentiment, which I don't think so. That's why I was taking the longs, because to me those news weren't that important that it would completely change the sentiment and made a lot of big players just selling the euro. You need to remember that euro is still quite strong currency, right? So the chances of euro just recovering that gap are already quite high, and I'm going to show you that on the charts. So that was the thought process. First, you need to evaluate what happened during the weekend, what were the news, and how big of an impact are those news going to have on economy or on the commodity and based on that you are creating a bias. In my view, it were bearish bias, but not bearish enough to completely change the sentiment. But first, I wanted to speak about data, because a lot of people are going to be saying, why should I pay attention to weekend gaps? It's something that happens once every 2-3 weeks. Yes, but it's increasing a little bit, because according to recent studies, it's a 15% increase in 2025. And it's all because there's more BS happening within the world. So there's more wars, there's more energy disruptions, there are more geopolitical tensions, and all of that is not only happening throughout the week, but also on the weekend. And that's why we see increase in weekend gaps, and also in the size of the weekend gaps. That's why I wanted to bring out this topic, because I know there's going to be some traders who are interested in trading something on Monday. If it's a setup and has high probability, I think there's going to be a lot of you who are going to be taking the chances, because most of the traders, they don't trade on Monday. They don't see enough volatility. They are just preparing for the trading week, so highlighting the charts, support, resistances, filling out the economic calendar, building a bias rather than trading. But there are some traders who would like to trade on Monday, and if there is a weekend gap, it's a great opportunity for you. There's a 70 to 80% chance that market will fill that gap at some point in the future. And there's also 60 to 70% chance that market will fill that gap within the first 12 to 48 hours. But I'm not forcing you to trade a setup. I'm just telling you there's a setup that you can trade. And I do look for these setups because it has high probability. That's all I'm saying. It has a decent chance of bringing back profits. Yeah, that's what I'm trying to say. I've got a couple of more statistics, because it's not just 60 to 70% chance that it's going to be filled out, but I also did some researches on which markets are filling out the gaps the most. And I think number one is Euro US dollar, but I'm going to give you the exact numbers once I finish the coffee. So let's bring it upstairs, and I'm going to give you the rest of the statistics. So basically, what currency pairs have the highest chance for filling out the gaps, and then we're going to take a look into that specific setup, which is based on 3 pillars: size of the gap, fundamentals behind it, and price action. Let's do it. So here are the notes, weekend gaps, the statistics. Euro US dollar 78% chance, pound dollar 72% chance, pound Japanese yen 64 only, and then US dollar Swiss franc 75% chance. This is the trade on Euro US dollar that I was posting into Discord. So if I'll open the Discord where I have opened the trade, and this is the analysis. So I was basically saying, look guys, there's a gap. There's a still really high chance of market filling out the gap. I'm going to trade it. You can as well. So now let's demonstrate the setup on a couple of examples. The first one is Euro US dollar, because that is where I took most recently the trade based on weekend's gap, and then I've got a couple of more. Let me start from the very beginning. So the gap is the difference where market closed on Friday and where the market opened on Monday or Sunday, depends on where you live. And this blank empty space, that is the gap, right? So you can notice I've got one more indicator in the trading view, and that is the highlight of Asian session, this yellow rectangle. Now I'm using it to analyze what is happening in Asian session. Actually, a lot of day traders are using the highlight of Asian session to see, was it a bearish or bullish sentiment, what was the price action in Asian session, and also there are dedicated strategies specifically to Asian session. For example, one is the Asian lows and highs. That is the idea that above every Asian session there's a liquidity above the high and below the low, and that the market can, just like here, take the liquidity and then pull back. And here's the great example at the very start of the chart. So we've got the Asian session low, we took the liquidity, and then we did a 60 pips pullback. But I'm going to dedicate the whole separate video about Asian ranges and the session and the different strategies that I know about and have decent win rate. But now let's focus on the gaps. In the gaps, we're going to just use it to see what was happening after the gap was created in Asian session if we want to trade it in the London session, right? So we know what is gap, and now the first pillar, which is a gap size. If the gap is 5 to 25 pips, there's an 85% chance that that gap is going to get filled. If the gap is 50 to 60 pips, the chances are getting 12% smaller. And if the gaps are 80 to 100 pips or even more, then the chances are 30% smaller, which is quite important. This gap is 52 pips, which is quite a lot. I'm not going to lie, this is not the perfect example, but what is the second pillar? That's the fundamentals. And we spoke about it already. It was due to the energy crisis in Europe, but I told you, euro is not a weak currency, right? So we know that fundamentals are against the euro, but we also know that news like that wouldn't probably change the whole sentiment for the euro, okay? And when we know that, we go to third pillar, which is price action, to confirm if the fundamentals or our bias are actually on the right place. So what we saw first when we opened in Asian session, we saw a little bit of bearish momentum, but then a huge bullish momentum, right? Which tells us that there were a lot of buyers in Asian session of euro, right? Especially with this huge candle, where is what you guys call fair value gap, which is basically just imbalance, saying that there were way many buyers and just few sellers. That's why we create candles like that, and then eventually we create also the fair value gaps. So after the Asian session where we saw bullish momentum, then I'm waking up and I'm analyzing Frankfurt and London session. And we saw a little bit of bearish momentum in London session. However, that was immediately recovered. And that was the trigger for me to go for the trade. So right here, I posted on Discord and I said, I'm going for the trade. We're going to fill out the gap entirely. Why? Because we did not even create a new lower low. There's a theory that there's liquidity below Asian low. And also, here's the low. So if the market would be actually bearish, we would see at least a movement to create new lower low, but we did not. We create higher low. So that tells me that the sentiment and the structure of the market right now is quite bullish. So that's the price action behind it. It's very simple. And when we see market after the gap going sideways, the chances are way higher, because if the fundamentals would be actually that strong to create a huge gap and change the sentiment, we would see a bearish momentum, a little bit of correction, and then continuous bearish momentum. We did not. We saw market go sideways, which only increasing the chances that eventually that the big money are going to be filling out all of the limit orders right there, right? So it's very likely that we eventually will fill out the gap. And where do I usually leave the trade? It is when we close the gap, which would be right here. I could hold it for a little bit longer, but that is the strategy that I'm trading, or not the strategy setup, I'd rather say. Because when we hit that level, it usually signals that the big money are going to take every order that is within this range, and also maybe above the highs, because there's still liquidity above it. And then we're going to continue within the direction of the gap if the fundamentals were strong, right? We did not do that. Indeed, we were going sideways above the highs, and then we pushed lower, right? Now, here's a great example, because today is Monday, and here's a great example why I'm closing where the gap is filled, because we did it this morning. Look how beautiful setup this is. We swept the Asian low right here, and at the same time we closed the gap, then market reversed, and if you'd open longs, you would be now smiling because it's about 74 pips. But this is a brilliant example, 8+ setup. And the gap is smaller, so I wouldn't be trading filling out the gap. But on the other hand, you can trade that we will bounce from the gap, not only to take the liquidity below Asian session, but also the gap, right? So that is one example. And now I'm going to show you the second one, which is a complete opposite. A setup that I was trading with Ken and Angel when I was doing the live streams for E8 Markets. So it is still on E8 Markets YouTube channel. If you want to, you can search it up. It's in October. So let me find in October on the charts of US dollar Japanese yen. So this is the second example, US dollar Japanese yen in October, and it's complete opposite from what was happening on Euro US dollar. Not only that the gap is like 4 times bigger, what is the the first pillar is the gap size. This gap is about 200 pips big, which tells you how huge and impactful were the fundamentals or the data, the news during the weekend. What happened this weekend? It was the election in Japan, and the LDR, the Liberal Democratic Party in Japan, won with Takashi as a leader of that party, and she is well known that her action in politics are very dovish for the central bank. At that time, the Bank of Japan was about to hike rates, and just like that, snapping the finger in a split second, they completely change to dovish statement, to dovish tone, which is a complete change of the sentiment. And what I told you, if it's changing the sentiment, the gap is not going to get filled out if it's too big of a news. And you can sometimes only say that just based on the gap size. And what happened then? Well, you probably know that we were continuing towards the upside. So we've got pillar one, huge gap. The chances are already, based on the data, getting really small. The second, fundamentals, changing the sentiment. And the third, price action. In the Asian session, we already saw much of a bullish momentum. Then we've got in New York session a little correction, but we continued. I think I was entering already at the high, and you can clearly see again the strategy, the Asian highs. We've got Asian high here. We swept the liquidity, and then we create a correction. How much pips? And it was 50, 60 pips. So still tradable, but I was entering, I think, somewhere here before the New York session, so I went into a drawdown, but I knew that we're going to continue towards the upside, not only because of that huge gap, but also because of the macro fundamentals that were suggesting that the Bank of Japan is going to be dovish for a little longer, so not really good news for investors in Japanese yen. So again, size of a gap, fundamentals, and then price action. If you see a bullish momentum after that gap in Asian session, we will most likely continue in that direction. So those are the weekend gaps. If you want to trade them as a setup separately, as I told you, this is not going to be a strategy, but from time to time, you're going to see the weekend's gap, and the chances are in your favor if you can read the fundamentals, the news. If you want to do that, you can pay £4 for Reuters, you can pay $6 for Wall Street Journal, you can just buy some of the subscriptions with the reporters. They will explain the situation, and you can build your bias based on the news. So I hope you've learned something today. The next video is going to be probably about the Asian session, Asian ranges, and a couple of strategies that I know that can be tradable within the Asian range. And I hope next time you'll see a gap, you won't be afraid to trade it. You can trade it as a trial. Just go on TradingView, include this indicator, which is like a testing setup, and then you can just confirm whenever your idea was correct or not. And you can get a little bit more into macro fundamentals because it's very important. So thank you guys so much for watching, and I'll be very soon with another video. Be profitable, be safe. Cheers.